Assalamualaikum. My name is Nur Ali Shafa binti Husin.
Hi, my name is Najwa binti Muhammad Asri.
Hi, my name is Siti Nabila binti Bekti Lelana.
Hi, my name is Iza Zulaika binti Ismail.
In this presentation, we are going to talk about the application of Wakalah model on general and family takaful, which is used by Zurich Takaful Malaysia Berhad.
Assalamualaikum warahmatullahi wabarakatuh. My name is Najwa. So today I'm going to present to you on the research background based on our case study conducted. So nowadays we know that Takaful industry has been booming as an alternative of the insurance industry. That is why Takaful has successfully penetrated the market in Malaysia back in 1983. And it is proven that the Takaful industry not only widely practiced in Southeast Asian countries but also in non-Muslim countries as well. So therefore, the growth of the Takaful industry has been escalated and expanded rapidly across the world with an increase of growth rate 15% annually. As we know, the Takaful industry have been regulated and controlled by Bank Negara Malaysia, which is Central Bank, under Takaful Act 1984 to ensure that the Takaful business is conducted in a manner without compromising the interests of the participant and also the Takaful industry itself. According to statistics, Takaful industry now have become one of the biggest demand transaction from where we can see in an example. In 2014, 11 Takaful companies have been registered in Malaysia. To be Sharia compliant Takaful operator, Sharia requirement must take into account where there should not be any prohibited element such as uncertainty, gambling and interest in the Takaful practices. Thus, the operating activities of the Takaful operators is not simple and straightforward compared to conventional counterpart. The opportunity provided by its client to subscribe to an Islamic and Sharia compliant is the main growth and development of the Takaful industry. The idea of having the Sharia compliant is inspired based on the Islamic teaching, based on the Al-Quran and also Sunnah, which the concept is people will help other members during peril and harm. Although many achievements have been obtained in more than 30 years of the establishment of Takaful in Malaysia, Takaful industry is still facing criticism in their operation from some scholars and also expertise. So therefore, purpose of our case study conducted is to highlight the issues and also the challenges faced by the Takaful industry. And not to forget, we will also will be presenting to you upon the application and the disclosure of Wakalah in our chosen Takaful company, which is Zurich Takaful Malaysia Berhad. Next, we move on to the problem statement. So our first problem statement is the nature of donation, where in the Takaful industry, the contribution made by the participant is known as tabarruk, is imposed to obtain future compensation, whereas it should be on a voluntary basis. Second one is distribution of underwriting surplus. The scholars were debating on the ownership of the underwriting surplus, whether the participant will own it alone or jointly owned by the participant together with the Takaful operator. Thirdly, second layer of charging fees in Wakalah model. Fees imposed on the adopted model is considered too much and too many layers in generating profits cause the disadvantage to the participant side. Fourth one is agency problem. The Takaful operator who acts as an agent and managing funds on the participant behalf may encounter breach of trust and also transparency, such as moral hazard and also adverse selection. And last one is business entity, not charitable body. Although Takaful is based on the mutual assistance concept, it is still a business entity with a goal profit, because every business, no matter what they venture in, which is conventional or Islamic, is still associated with risk.
Now, let us look at the objective of conducting this case study. First, we wanted to investigate the differences between Takaful and insurance. We know that the Takaful is an alternative to insurance, but what trigger is how does the Takaful differ from insurance, making it permissible in the eye of Sharia when insurance is considered haram. Second, we wanted to see the issues and challenges faced by the Takaful or arises from the Takaful. We know that nothing is perfect in this world, hence we believe there must be issues and challenges faced by either the Takaful operation itself or the Takaful operator or to the participant. Third, we wanted to see how the Wakalah contract is applied in the Takaful. We know that there are two models of the Takaful, which first is the Mudarabah model, second is the Wakalah model. However, in this case study, we decided to focus on the Wakalah model. Third is the legality of the Wakalah contract. We know that the Wakalah contract is permissible by the Sharia, but what we wanted to see is what evidence that constitute the legality of Wakalah. It could be the Quranic verses or the Hadith. Lastly is how the modified Wakalah model is accounted. For this purpose, we have looked for the financial report of the Zurich Takaful Malaysia Berhad to see how they account their modified Wakalah model Takaful.
Let's move on to methodology. Methodology is a system of method used in a particular area of study or activity. This also can be defined as a system of broad principles or rules from which specific method or procedure may be derived to interpret or solve different problems. To find the answer for the research objective, we use secondary sources as our references for us to gain information regarding Wakalah and Takaful. We use textbooks from Islamic financial system and several research papers from other researchers. It makes easier for us as the sources are completed with much information that we needed. In addition, we decided to use qualitative method in order to collect and analyze data for this case study. In this section, there will be outlines of various steps in data collection. This step is important as it helps us to collect data, provide some information, and make sure the data collect is done in a way of the purpose of case study. So the steps is started with use resources to get and collect data and information. We use resources such as the main textbook published by International Sharia Research Academy for Islamic Finance and research paper from other researcher and Bank Negara website to access guideline provided by Sharia Advisory Council of Bank Negara Malaysia. All the information get will be compiled, filtered and rearranged. This step is to determine relevant data and eliminate the irrelevant data. Next, we will analyze the data to make detailed explanation that involve analyzing and interpreting data collection. This is the time-consuming steps since we need to identify the reliability and relevance of information gathered. Lastly, we will make sure and obtain the result from the evaluating all the data. This is the last product of data collection method. The result will indicate whether we are able to meet the purpose of conducting the research and find a solution for the problem stated. In conclusion, we found out that methodology is very important in conducting case study. This is because it shows how the process of collecting data is made, what method we use to get sufficient data and information, and how we analyze the data and what the result can be concluded. This kind of process is very beneficial for all the researchers out there, especially for people who do not usually do research. They can use this method to help them to be more systematic and confident with the case study they want to do.
For the general Takaful, Zurich has offered 19 products of the general Takaful. So these 19 products have shared the same characteristic, which is the first one. The general risk investment will pay the claim on the participant based on the contract of riba. The second one, the surplus sharing will be shared equally between the participant and the Takaful operator at 50-50 ratio. And the last one, the participant have to pay 6% charges from the contribution made and also a stamp duty of 10 ringgit. So from these 19 products offered, I have selected 2 products to be further discussed. So the first one, we take a look at the burglary Takaful. So this Takaful provide coverage for loss or damage of the content in the business premise as a result due to theft or robbery. So this product have the Wakalah fee, consists of commission 25% of the contribution, and also the management expenses 18% of the contribution. So this will bring up the total of 43% of the contribution made by the participant will go to the Wakalah fee. And the second one, TAG PAC plus Takaful. This product provide compensation in the event of injuries, death, and disability of any person getting in or travelling in the participant's car that caused by external or accidental events. So the Wakalah fee consists of commission 10% of the contribution and also the management expenses 19.5% of the contribution. So this will bring up the total of 29.5% of the contribution made by the participant will allocate to the Wakalah fee.
Next section is Zurich Family Takaful. In this list, there are 16 family Takaful offered by Zurich company. Let's look at 2 examples. Example 1 is Takaful Hajj. Takaful Hajj is a plan that helps the participants to accumulate funds for the purpose of performing Hajj or other noble intentions that expire when the person covered reach 80 years old. Example 2 is Takaful Hero. Takaful Hero is a family protection plan that is designed to protect them from the burden of death when the person's cover involved in accidental death. Generally, the investment profit after deducting Wakalah tarawal fee will remain in the participant investment account PIA for the benefits of the participants, and they will no further share it with the shareholder. In terms of Wakalah fee, for Takaful Hajj, the percentage will be 60% from the contribution made on the first certificate year. On year 7 onwards, no Wakalah fee is charged. Meanwhile, for Takaful Hero, the value of Wakalah fee on the first year if the contribution term is 10 years will be 150 ringgit. On year 7 until year 10, the value is reduced to 50 ringgit. Next, in terms of underwriting surplus, if there are any underwriting surplus at the end of each financial year, it will be shared between the participants and Zurich Takaful at 50-50 ratio based on hibah or gift contract. However, in Takaful Hero, there is an additional fee known as incentive fee or jualah. Zurich Takaful will receive 10% of the investment profit for managing the PIA, and the remaining 90% will belong to the participant.
Let us look at the Syariah Committee report of Zurich Takaful Malaysia Berhad. So under this report, Zurich Takaful has outlined few major developments that took place during the financial year regarding the Syariah activities of the company. So first is the Syariah governance. The Syariah governance is the initiative to strengthen the Syariah governance of the company. It review and update the Syariah non-compliance event reporting guideline, the Syariah framework, the Takaful operator model, and Syariah charter and purification policy. Next is Syariah review. Syariah review is to ensure the objective of the company to become a Syariah compliance company is achieved. It also ensures that the company comply with the Sharia ruling issued by the Sharia Advisory Council of Bank Negara Malaysia. Next is the Sharia audit, business zakat, and purification. So Sharia audit develops an audit plan that examines on task basis. It examines any relevant transaction, documentation, and procedures. As for the zakat, since zakat is mandatory for Muslims and Muslims company, as Zurich Takaful wanted to become a Sharia compliance company, therefore they has fulfilled their obligation to pay zakat. Lastly is to confirm that the financial statement comply with the Sharia rules and principle is part of the purification policy of Zurich Takaful Malaysia.
On 31st May 2018, the Minister of Finance with Bank Negara's letter granted a license to the Zurich Takaful Malaysia Berhad to commence general Takaful business with effect from 1st June 2018 pursuant to a business transfer scheme which was approved and confirmed by the High Court of Malaysia on 27 April 2018 in accordance with Islamic Financial Service Act 2013. The consideration for the transfer of the asset and liabilities of the General Takaful business as at 1st June 2018 was RM1 ringgit. The business transfer was accounted for as capital reorganization of the financial statement. On 1st June 2018, Zurich Takaful Malaysia Berhad transferred the entire assets, liability and undertaking of its General Takaful business to the company under the business transfer scheme pursuant to Section 112, Subsection 1 of the IFSA. The General Takaful business has existed in the company since the beginning of the financial period. Next, let's look at Takaful receivable. Takaful receivable are recognized when due and measured at initial recognition at the fair value of the consideration received and receivable. Subsequent to initial recognition, Takaful receivable are measured at amortized cost by using the effective yield method. If there is objective evidence that the Takaful receivable is impaired, Zurich Takaful will reduce the carrying amount of Takaful receivable accordingly and recognize that impairment loss in the profit or loss. As you can see on the slide, Zurich Takaful has reported the amount of RM43.926 million of Takaful receivable after deducting with the allowance of impairment, which amounted to RM9.914 million. The amount of Takaful receivable is taken from contributions from agents and due to Takaful incidents. Let's move on to Takaful asset. Takaful is the form of mutual assistance among participating Takaful operator in which the Takaful operator will pay a certain amount of contributions into the Takaful fund in order to share a certain defined risk. As we can see on the statement of financial position, under Takaful of Takaful contract, there is claims ability and unearned contribution reserve. Claim liabilities is the amount of uncertainty from the projection of the company. This uncertainty were arising from the changes of underlying risk, changes in spread risk, and underlying assumption. These uncertainties are partly addressed by holding of the claim liability at 75% per level as required by Bank Negara Malaysia. It is a guideline on valuation basis for liabilities of general Takaful business. Next, the unearned contributions reserve is representing the contribution received after Wakalah fee was deducted the risks that have not yet expired. Basically, the reserve is released over the term of the contract and is recognized in the statement of profit or loss of General Takaful Fund. In determining UCR, unearned contribution reserve at the date of statement of financial position, The method that most accurately reflects the actual earned contribution used is 25% method for marine cargo, aviation cargo and transit business, which is 1/365 method for all other classes of direct and facultative inwards business, with further reduction for Wakalah fee expenses to reflect the Wakalah business principle. Last, at the reporting date, the company will look at the UCR whether it is sufficient enough to cover all the expected future cash flow which related to future claims plus the additional risk margin against current Takaful contract. Zurich Takaful applies a risk margin to achieve the same probability of sufficient of future claims as it is achieved by the estimated of the outstanding claim liability. Last but not least, at the end of financial period, the amount of Takaful asset that recorded by the company, which amounted to RM 139.413 million, which transfer from claim liabilities and UCR of General Takaful Fund. Next, Zurich Takaful has reported the amount of RM 45.316 million as their Takaful payable. This amount comes from the payment to agents and intermediaries and payment for Takaful operator and cedents. For the Wakalah model, in order to return for rendering the agency services, the operator is permitted to charge a fee under the agreement. The agreement must be made within the participants, and the fees paid to the agent and the Takaful operator will be payable from the Takaful contribution paid by the participants. In this sense, management expenditure can be charged to the Takaful fund as upfront charges based on the agreement made. Amount payable are estimated in the manner consistent with the related Takaful contract. Next, we can look at expenses liability. The amount of expenses liability is generated from the business transfer as at 1st January 2018 and the amount arising from General Takaful portfolio. On 1st August 2018, the company has entered into a business transfer agreement with HSBC Amanah Takaful Berhad to acquire its General Takaful portfolio with effect from 3rd November 2018. Therefore, the company has assumed expenses liabilities of RM 7.775 million for the portfolio acquired. Other expenses incurred during the financial period is also classified as expenses liability. The total amount of expenses liability of General Takaful Fund will record as unearned Wakalah fee of Takaful operator based on estimations performed by the qualified actuary. As we can see on the statement of financial position, the amount of RM 14.609 million of Takaful operator is classified as expenses liability. This shows that the amount of Wakalah fee that will be received by the Takaful operator from the participants as a fine. As we know, for the company, the Wakalah fee will act as expenses for them because they need to pay to the operator for their performance, while for Takaful operator, Wakalah fee will present their income. Other than that, the amount represents the portion of Wakalah fee income allocated for management expenses of General Takaful certificates. Last but not least, at the end of financial period, Zurich Takaful will report the higher aggregate of unearned Wakalah fee than the unexpired expense risk together with the related provision of risk margin for adverse deviations.
Now, let us see the disclosure of Wakalah contract in the statement of profit or loss of Zurich Takaful.
First, let us see how the Wakalah fee is accounted in the statement of profit or loss of Zurich Takaful Malaysia Berhad. So first, in the income section, there is a Wakalah fee income amounting 136,361,000 under the Takaful operator, whereas there is a Wakalah fee expenses amounting to 136,361,000 under the general Takaful fund. So why does under the Takaful operator it is considered as the income, whereas under the general Takaful fund it is written off as an expense in the statement of profit or loss? So first we need to know what is Wakalah fee. Wakalah fee is the fee required by the Takaful operator to be paid by the participant as an agency fee for what they have done to the contribution by the Takaful participants. Therefore, this is why it is considered and recognized as income to the Takaful operator, because the Takaful participant will have to pay them for the service they rendered. And it is considered as expense. Therefore, it should be written off in the statement of profit or loss under the general Takaful fund. Next, let's see how the contribution ceded for Takaful is accounted in the statement of profit or loss. So the contribution ceded is reducing the contribution earned by the general Takaful fund. This is why it is deducted from the gross earned contribution. So what is the contribution ceded to Takaful? So it is actually, Takaful is a mutual assistance between the Takaful operator. So from the contribution paid or contributed by the participant, a portion of it will be paid for Takaful, which is a mutual assistance between the Takaful operator in case that there is something happened to the Takaful operator itself. Lastly, let us look at how the surplus sharing is accounted in the statement of profit or loss. We could see that there is a surplus sharing from the general Takaful fund recognized as income in the statement of profit or loss to the Takaful operator, amounting to 4,240,000. So since Zurich Takaful applied a modified Wakalah model, the surplus from Tabarruk Risk Fund will be shared between the participants and the Takaful operator. This is how there is income recognized under the name of surplus sharing from the general Takaful fund, amounting to 4,240,000. So this has been pre-agreed in the product brochure, where there is a clause that stated every participant is entitled to share surplus from participant risk investment account with the Takaful operator at a pre-agreed ratio of 50-50 based on the gift contract. This is all for the disclosure of Wakalah contract. Thank you.
As a conclusion, from our case study research, we managed to get answers for our objectives stated earlier. First, we learned that Islamic Takaful complies with Sharia rulings compared to those in conventional insurance company. This is why more clients are attracted to subscribe the Takaful scheme, because it is free from prohibited elements such as interest, uncertainty, and gambling. Besides, Takaful is widely known for its concept of cooperation with one another during perils and harm despite of profit making. Number 2 is we can conclude that most Takaful companies in Malaysia have been applied the Wakalah model. A relationship arises between the participants and the Takaful operator, clearly reflecting a contract of agency whereby the Takaful operator acts on behalf of the participants in managing the Tabarruk fund. Next is concept of Tabarruk. The contributions obtained from the participant is used for an obligation of joint guarantee and mutual help when other participants suffer losses. Moreover, income generated from the Wakalah fee helps the Takaful operator keep their business running without being unjust to any involved parties. Thirdly, we learned that although the Takaful industry is undergoing a period of rapid growth, there are still issues and challenges in their operation. To resolve this issue, The Sharia Advisory Councils of Bank Negara Malaysia provided a clear guidelines to all Takaful companies in Malaysia in conducting their services in a true and fair view considering Sharia requirement. Besides, Takaful operator clearly states on how the fund will be managed, how much the charge on Wakalah fee, and how the proportions of profit distributions be made between the participants during concluding the contract. Moreover, we agreed that modified Wakalah model applied by Zurich Takaful is permissible by the Sharia principle. The main difference between the pure Wakalah and the modified agency is that Takaful operators charge the proportionate shares in the underwriting surplus with the participants. The sharing must be based on the performance incentive in the form of ju'alah. To retain transparency, the agreements of two contracting parties on the surplus percentage share must be obtained. Lastly, we have identified how Zurich Takaful disclose its product in financial statement. Wakalah fee, surplus sharings, contribution seats to Takaful operators are recognized in the statements of profit or loss, whereas the Takaful receivable, payables, expense liabilities and Takaful assets are disclosed in the statements of financial position. Besides, the Sharia Committee report concludes that the applications of Wakalah in Zurich Takaful operation is conducted in conformity to Sharia Advisory Councils of Bank Negara Malaysia. I think that's all from us. Thank you.